Hi guys. Today I'm going to be talking about Euro USD. So as you all know, I go on the monthly time frame. On the monthly time frame, this is the area where I mark out my key levels. Levels are areas where market has rejected significantly from several times. Look at this area. It's one touch, two touch, three touch. That's why this market pushed up. And when this market was reversing, it rejected in this area twice. Look, 1 month, 2 months rejection. Several candles at this place. That's what rejected this market at this point. And if you check here, there is also a rejection at this area. And if you check here also, there is also a rejection at this area to the downside. So this area is currently an important level because there is several rejection in this area. If you check here, there's also a rejection in this area. Another thing that I check out for when I come on the monthly time frame is chart pattern. What are the chart pattern that I can see on my monthly time frame? If you look at this area, this market absolutely reversed down to this area because of this double top that I'm saying here. Double top or head and shoulder pattern. It looks like a double top and it also looks like a head and shoulder pattern. So either one of the both for this one will do. But as long as you know that it's a chart pattern that is going to reverse the market down. So if you see this one, this is a head and a shoulder pattern. If you see this one is a triple bottom. This triple bottom was reversed this market to this area. So presently, I'm looking at the present price action. What is the present price action doing? That is what I'm currently concerned with. Right now, the chart pattern that I can see here visibly, I could see a head here, a left shoulder, and a right shoulder. Basically, I could see an inverse head and shoulder pattern presently as of the moment on Euro USD. So, and there is a law in price action that states that when you have an inverse head and shoulder pattern on a specific instrument, the inverse head and shoulder pattern is only valid if the neckline has been broken. In this case, the neckline is not quite broken yet completely, but I could also see that there is a monthly engulfing candle because what I also check is the candlestick formation at that particular point in time at that month. This last month was quite bullish. The candlestick formation here was quite bullish. So I'm looking at this market very closely as of the moment because what I'm going to know, how am I going to know that, okay, we are going to be bullish or we're going to be bearish? So you see this candlestick that is forming on the monthly time frame. If you don't understand what is happening on the monthly time frame, that's why you scale down to the weekly time frame. If you scale down to the weekly time frame, you come to understand what the monthly candles are doing. Because sometimes the monthly candles are not that clear. That is why I don't look for so many things on the monthly time frame. I come back down to the weekly time frame and check what the market is doing on the weekly time frame. What the market is doing on the weekly time frame is basically a breakout. Remember, this is the neckline on the monthly time frame. We could see an inverse head and shoulder pattern on the monthly time frame. And remember, this is the neckline of the inverse head and shoulder pattern. Presently, market is looking like it's testing the neckline of the inverse head and shoulder pattern. Although I could see a very profound chart pattern on this place, I could see a head, left shoulder, right shoulder. I could see consolidation. All this basically is consolidation around this place. So what will be my thought process on the weekly time frame? I mark out the most significant levels that I'm going to be looking at on the weekly time frame. Okay, this is a level of structure on the weekly time frame. This is the level of structure, the neckline on the monthly time frame. That's why I use a green line to identify that level. But I also do something. I also check out the key levels, like the minor key levels, not the major ones, the minor key levels on the weekly time frame. This area is a key level. If you see there is a rejection here, how do I check out my key levels on the weekly time frame? There is a rejection here, there is a rejection here, rejection, 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 rejection. So you get to know this thing, you get to understand this thing with time. Once you've been in the chart for a while, you get to understand how you can mark out specifically the key levels. Then the area, again, where I'm going to be looking out for as my key level is going to be this area. This area. Why did I choose this place as a key level? Because this market is what, this area is what dropped this market back down to this area, to this zone. So this level is going to be a significant level for me as of the moment. So, and also if you check this area also rejected here significantly. And if you check, there's also a rejection from this area. If you even look backward, you're going to see more rejection in this area. Rejection, rejection, rejection. So that is why I mark this place as a very significant level on the weekly time frame. So these two areas, I don't want to mark out a lot of areas on the weekly time frame. These two areas is the latest areas that I'm going to be looking at for price action, for what price action is going to do. Normally, when I come on the weekly time frame, I'm only looking at the chart pattern formation on the weekly time frame. So now, ideally, what I'm going to do is I'm going to swing my trend line from swing low to swing high. My trend line from swing low to swing high in this area. So there is a one touch here, there is a two touch here. Ideally, I'm looking for this market to touch this area, to this place to be the touch of the trend line for Euro USD. It's going to be nice if I see it, although this is the neckline on the book, you're going to see that they will tell you that this place is the neckline. Ideally, this market is supposed to be going up from here. But in reality, it might dip a little bit downward. How do you know that this market might dip a little bit downward? It's when I come to the daily time frame. Remember, on the weekly time frame, I'm only checking the structure of the market. What are the chart pattern that I'm seeing on the weekly time frame? That is what I do on the weekly time frame. I check out my chart pattern on the weekly time frame. Then I also mark out the minor levels on the weekly time frame. Then I check the weekly candles. What is the weekly candles doing? This weekly candle is consolidation as of the moment. This weekly candle is basically consolidation. When you see candle going up, going down in the same level, basically what the market is doing is just consolidating as of the moment. So since I see that the market is consolidating, if I come back to my daily time frame, what am I going to be checking on my daily time frame? My daily time frame, I'm going to be checking the market, the nature of the previous correction, the nature of the previous correction, how the market corrected previously. That's what I'm going to be checking on the daily time frame. If you see, remember that this green line is the neckline on the monthly time frame. Important level is the neckline on the monthly time frame. Important level. And if you also check, this is the weekly key level, the minor key levels. This is also the weekly minor key levels. So I'm looking for price to repeat this pattern, this same pattern here. If you check this market around this area, you check this consolidation is quite big. This consolidation is quite big. If you see this impulse, this consolidation is not looking as big as this one, if you ask me. This consolidation is not looking as big as this one, and it's not looking as big as this one. So, and this as well is also a, if you check this kind of candlestick, this kind of formation is a bullish pattern formation. That's why it's a bullish pattern formation. So that is the more reason why I kind of, as of the moment, as of the moment, as we speak right now, I'm still favoring the upside as of the moment for Euro USD as of the moment. I'm favoring the upside as of the moment for Euro USD. However, before I'm going to trade the upside for Euro USD, I want to see a break, a candle break, a daily candle break from this trend line. That is only when the upside is going to be valid for Euro USD. I want to see a candle break of this counter trend line on Euro USD. However, this might not break yet. So since it might not break yet, I'm looking that the market will come and test a specific level, which is the demand level. I'm looking at market, I will mark out the specific level. This area is looking like a demand zone if you ask me. This area is looking like a demand zone. So I will mark out this demand area around this area. I'll mark out this demand zone. It's looking to me like euro will come back down to test this area. And if you also check, this area is not only a demand area, this area is also a, a very important level as well. If you mark out your Fibonacci from swing low to swing high, you also see that this area is also an important level. And when you have a trend line, no, number one, when you have high, high, lower high, higher high, and technically another lower high in this area, number one, trend in the same direction. Fibonacci is also in the same direction. Fibonacci is also pointing in the same area. Trend line is also pointing in the same area. And we have minor support or demand zone around the same area. Definitely, when market drop in this area, it's going to push up. It's definitely going to push up. So this area is where I'm expecting the euro to drop to, around this area, before the market is going to push up. This is the area where I'm expecting the euro to drop to this area. It's not yet, the market is not yet ripe to go up yet, if you ask me as of the moment. However, However, if I see a bullish price action breaking this trend line, a bullish price action breaking this trend line, I will be considering this trade for a buy, but the euro is not yet ready as of the moment. So since the euro is not yet ready and I still have the idea that the euro is going to come down here, what I'm going to do at this point right now is I'm going to also look for selling opportunity back in this area. I'm going to look for selling opportunity back in this area. So if I'm going to look for selling opportunity back in this area, I'm going to be very careful. Then I'm still going to come back to my daily time frame for entrance. Entrance is one of the most important thing in the market. So I'll come back down to my 4-hour time frame. Wait for a moment. I'll come back down to my 4-hour time frame. I want to come back down to my 4-hour time frame. I will check. I will be very careful when I'm coming down to my 4-hour time frame. Normally, I don't like coming down to my 4-hour time frame so much because 4-hour time frame is kind of deceptive. I'll be very careful when I come back down to my 4-hour time frame. Why? Because I'm looking at the waves. What I'm going to be doing if I come down to my 4-hour time frame, I'm looking at the wave, the way the market corrected. Wait, I'm putting this at the wick of the candles. At the wick of the candles. I like to put it at the wick of the candles. So that I'm going to be sure what the market is doing. So when I come back down to my 4-hour time frame, this I can take advantage. Since I know I've already analyze that, okay, I'm expecting the market to drop to this area. This is my analysis. I'm expecting the market to drop to this area. That the market is not just going to push up like this. So what I'm going to do, if I want to take advantage of this Euro USD move, what I'm going to do, I'm going to check the pattern in which this Euro USD corrected. If you look at this place, it's kind of a jagged kind of a consolidation that dropped this market to this area. If you look at this one also, if you draw, always make sure that you draw your, always make sure that you draw your trend line at the wicks of the candle. Always make sure that you draw your trend line at the wicks of the candle. Don't draw it too close. Make sure you draw it at the weak side of the candle. If you look at the first consolidation, it's kind of jagged kind of consolidation, like it's not a straightforward consolidation. If you look at the second consolidation that dropped this market down, it's not a straightforward consolidation. So if I'm going to be expecting another consolidation around this place, expect the consolidation to be like this one or like this one. It's not going to be, best believe that this consolidation that is going to happen here to drop this market to this area, it's not going to be a smooth consolidation. It's going to be like kind of a jagged kind of consolidation like this. So what I'm going to be doing is I'm going to be waiting for a consolidation like this or a consolidation like this. Then I draw my trend line like this. Maybe something like this. Maybe it's going to be something like this. I draw my trend line kind of something like this that is going to drop 4-hour candle close. How am I going to enter this market first? Before I enter this market, I'm looking for, I'll come back to my daily time frame. Before I enter this market on a 4-hour time frame, what I'm going to be looking at on my daily time frame is this. I'm going to be looking at bearish kind of formation. Bearish kind of formation. Why am I looking for bearish kind of formation? Because it is very important. If you come to this first consolidation that happened here before the market drop, this is not a bearish kind of consolidation. This candle, this green candle before this red, I will not sell here in this green candle. I will not sell here in this green candle. I will wait for this red to break before I'm going to sell, because this is not a bearish kind of consolidation. I will have to wait for this one to form first before I sell this market at this region. Number two, I will not sell in this green candle. I will never sell in this green candle. I will have to wait for a bearish kind of consolidation to form to tell me, okay, I'm getting ready to go down before I'm going to execute a trade. So what I'm going to do is this, since I've already established the fact that on daily time frame, I will check for like a kind of a confirmation what the market is doing at that time. Then I will come on the 4-hour time frame. I will come on the 4-hour time frame. Wait, trying to open. I will come on the 4-hour time frame and draw my counter trend line like so. I'll draw my counter trend line like so, a retest, a retest, a retest of the counter trend line. This counter trend line is not yet proper yet as of the moment, because we still need to have some kind of a pull back to this area, then a push up, so I can draw my counter trend line properly. This is not yet a counter trend line. It's not yet a counter trend line. So I'll wait for the market to push back down a little bit, push up, then I draw my counter trend line properly before I'm going to be looking for a breakout like this 4-hour candle close, but a retest around this area, a retest around this area. Since this market broke out in this fashion, and if you also check, before this market broke out, it gives a double top, then it breaks out, then it retests. You're not going to enter here. This is a risky entrance. You're not going to enter here. You have to wait for the retest of the neckline. You have to, this also, when this wants to break out, it gave head, left shoulder, right shoulder. So definitely, if this one wants to break out, it's going to give a pattern like this kind of jagged consolidation around this split before this thing is going to fall down. So wait for a kind of a pull back to this place, a push up, maybe to form a double top or a head and shoulder pattern around this region. Draw your counter trend line, then a retest of the counter trend line using the daily candle as an important level, then you sell this market at least to this area before we begin to consider the upside. Overall, the market is bullish, but medium term, the market can be bearish before the market continue to go bullish. But the only time as of the moment, the only time as of the moment overall the market is bullish, but medium term the market can be bearish to this place Then, however, this place is a very important level that I'm going to be watching out. So I'm going to be analyzing this area from next week after taking this trade down to this area. So this is going to be the end of my analysis for Euro USD as of the moment. So what I'm going to be doing, I'm just going to be watching carefully. You as well, you can be watching carefully what is happening in the market at, at this period of time, so you can also take advantage of the trade.